Welcome, everyone, to this week's Forte Financial Mortgage Group podcast. And this week, we have a very special guest who I've been so excited about having on. We have Wendy Bernard, attorney at law at Bernard Law Group. She is our compliance attorney. She does a lot of other things, but for Forte Financial, it's all compliance. And Wendy Bernard, say hello.
Hello, everyone. James, thanks for having me. And yes, we do compliance, and we also do real estate closings. And gosh, we've known each other, nearly 20 years?
I think 20 years. And it was, for me, it was just simple. When I finally decided I was going to go off my own, open my own mortgage company, there wasn't even a thought in my mind who I absolutely had to have help me, and that's Wendy. Like she said, I've known her for over 20 years, and compliance is no joke, and there's only one person I trusted to handle that, so that's Wendy. And luckily, she's still willing to deal with my nonsense, which sometimes is, I can be a little bit much at times, but she tolerates it, and I am grateful for it.
Well, you like to be in compliance, and I always appreciate that. So that's, I think it's really an example for other people to follow. So kudos to you and what you do.
Thank you. So the topic for today, which is something that there is no discussion that I've seen out there on, and I thought that our viewers would love to learn more about this, is, relationships that real estate companies have with mortgage companies. And, I don't like to speak law because I'm not an attorney, but, Wendy, she reviews a lot of these types of agreements, contracts. I believe they're called MSAs. Is that correct?
Mm-hmm. Marketing Services Agreement. And
I know that just in discussions with Wendy, we were looking into the possibility of doing one of these ourselves last year, and it was quite a debacle. And it turned out that the agreement that we were reviewing and considering really wasn't compliant any longer with the Connecticut State Banking Department. And that brought up a lot of interesting questions and issues that I thought, Wendy could speak a little bit more about these, specifically in the state of Connecticut. We'll stick to Connecticut. And, what can you share about just some overall general experience with them and your thoughts overall?
Well, that's a great question, James, and you're right. The MSA that was offered to you was definitely not compliant. So these marketing services agreement, just by themselves, in terms of their compliance, they're not only enforced by Connecticut, which the banking department has all authority to do, but the enforcement authority really comes from federal law. So this applies in any state, really. And it's the Real Estate Settlement Procedures Act. Anyone who's been in the mortgage industry for 2 days knows, particularly RESPA Section 8, which says you cannot give or receive a thing of value for a referral, right? And the biggest question I get asked about RESPA is, can it be $20 or $25? And literally, there is no actual dollar amount. But specifically, when it comes to these MSAs, RESPA doesn't speak of them as a covered issue, but because they've emerged, the law has had to deal with these agreements that people have come up with. So the CFPB, the Consumer Financial Protection Bureau, has tackled this issue constantly. And there's a recent publication they did, recent, a few years ago, which really clarified for the industry what is expected. So first thing, they did not say that MSAs are per se illegal, but they're not per se legal either. It really depends on a few things. It depends on how they're structured, and it depends on how they're implemented. So those are the very two things that every MSA needs to consider. And the reason for that is usually the illegal ones are set up where all it is, it's a payment disguised as a kickback. right? And the companies that get in trouble with these things, they have arrangements where these payments fluctuate based on how many deals come out of them, the level of production and so forth. And people still think this is okay in 2024. I just cannot understand why people still think it's okay to ask someone for payments for a referral or to give it, right? And so these MSAs, the ones that you see and the one we were presented with, which had so many illegal components, really had this sort of value-driven approach based on how many deals would be generated from them. So it's fact-specific, and what the regulators are looking at are, sort of the terms of those agreements. But they're very dangerous to go into without knowing what you're doing, because usually what people are looking for is really to pay for referrals, right? And I've seen realtors approach mortgage companies and ask them to pay $3,000 or $4,000, whatever the number is, towards their advertising, right? And typically they will say, they'll market the mortgage company. Well, the first thing the CFPB looks at is, really, are you a marketing company? Why would you charge for marketing? That's the first question, right? Yeah. Is that what you do normally? Mm-hmm. Well, it's not what they do normally. But to the extent that there is marketing that is really and truly being done, and not the simply, recommendation of the broker or loan officer to a real estate client, but truly marketing, right?
Yeah.
Where there is evidence of that marketing, where there is actual substantive marketing information being developed, produced, and published, right? It's legitimate, whether it's in newspapers or, on the internet and so forth. And to the extent that it's not just a duplication of something the realtor would do anyway, right?
Right.
It must be a specific thing that is, you can say without, with a straight face, we are actually marketing. And typically the ones I examine fail in that component, right?
So let me just ask you this, because just going back to my own personal experience with the one that I was looking at, when you first reviewed it, you're like, James, this isn't compliant.
Yeah.
And I'm like, this is the same agreement that they have with the other mortgage companies they're affiliated with, and that was really scary to me. Like, how are these other companies doing this if it's not compliant? And one of the things I know you told me was that, things have changed and it may have been compliant, years prior for different reasons. So, that was a little, obviously I addressed that to them specifically, but it's scary. So, like, the reality is there's probably a large percentage of them out there are not actually compliant, but they're still doing it anyway. And, I guess the bigger issue for me, I'm not that, of course that's an issue, but I'm not the CFPB, I'm not the banking department, right. So I don't oversee that. So, but for me, what really made me want to do this is, so many times we try to get into a real estate office to just go in there, share, hey, this is what we can do. As you know, like we always talk about how typically on average our rates and terms are lower than our competitors, advertise prices, we can get loans done in 24 hours. So there's a lot of value there for not only the borrowers but the realtors too. Right. But they won't let us in there to talk to them and share this because of these other affiliated relationships. I've spoken to the managers of some of these big real estate companies. We're not naming names. This isn't an attack on anybody. This is education. This is the whole point of our podcast is to educate. Because a lot of realtors probably are not aware that these agreements are not compliant, and customers, more importantly to me, customers, are being referred. And I'm going to use the word steered. Because I feel it's steering. If you're not going to allow me, Forte Financial, to come into your office because you have a relationship with XYZ mortgage company, and then you're not referring me, and not saying you have to refer me, but just you won't allow the opportunity when the problem is I see a lot of these when I do talk to these customers who've talked to the in-house mortgage person and we compare, it's not even close in most cases, where if the realtor was able to work with someone like me and refer us or another, wholesale broker, the customer would be getting a much better deal. But they're not, because they're being steered towards the in-house person, because I know that the management gets paid based on how many deals are done through this channel. So they are being pushed and steered in that direction, which is not legal.
Right.
And it's that is the part that the consumer is getting hurt, because they're not aware, and they're just taking their realtor's advice, because their realtor referred them,
Right. It is a huge problem, and I'll take apart, a few things that you said. So let me first say that no business has to allow another business to be a part of their business, right? So let's just put that on the table, right? However, the practice of preventing consumer choice is absolutely illegal. And I'll say I clarify something else, in that RESPA does not prevent one business from having multiple channels that serve the consumer. In fact, if you want to have a mortgage company and a real estate company and a title company, and you want an appraisal company and an AMC, whatever, you can have all of those services. You must, however, run them independently of each other, meaning that they need to have their own managers, their own employees, their own books and records, and their own legal structure, right? And they also must have what is called an affiliated business arrangement agreement, right? And that agreement says to the consumer, I have these 4 companies, if they're 4 or 3, whatever the number is, and when you use my companies, I, the owner, will have a financial benefit from your use of all of these companies. And more importantly, the disclaimer says something to the effect of, often there are other companies that have better prices than we do. And you are not obligated to use our companies, and you have the right and the choice to use any company you want. Now, the affiliated companies can create an incentive for the consumer to use them, not for paying each other, right? They can't do that, but they can for example, group their prices, their bundle their services in a way that creates a discount overall for all the services. Often that's not what's done, though, but that is what is allowable, as long as the consumer knows, as long as the disclosure isn't changed, and as long as the consumer has choice. Every single state, including the state of Connecticut, has that just embedded and enshrined in its regulations. You must give the consumer a choice. So the things that offend me are some of the ones that offend you that you've spoken about, which is to prevent the consumer from knowing what else is out there to their benefit, right? You should be working in the best interest of the consumer. Mm-hmm. And if you don't have it, you should be able to allow the consumer to find out whether it's out there. Oftentimes, I see, when we've done closings, I've had people ask me, do I have to use this person's preferred lender? Or I was told that I couldn't see the house unless I had a pre-approval or pre-qualification from this particular company. And that is illegal. I don't care who tells you it's legal, it is illegal, right? Mm-hmm. RESPA doesn't prevent, again, I want to make that very clear because it's a fine line here. RESPA doesn't prevent referrals. Referrals is a great way of growing your business. Yeah. But when you tell a consumer, in order to see a house, you must have a pre-qualification from this lender. I mean, even HUD prosecutes those types of, they consider it unfair lending practices, mm-hmm. and it doesn't provide equal housing opportunity if I have to have a pre-approval from the inside person or whomever you're preventing or you're requiring the potential home buyer to use. So I am 100% in agreement with how offended you are about this practice of steering, right? And of telling consumers, or misleading, I would say, is really the word, James, misleading consumers to believe that in order to proceed on the purchase of a property, they have to use this particular person. They do not.
Yeah, thank you, Wendy. That's, you have the legal lingo. We'll call it the legal lingo that is necessary to understand these things, because I'll say it in a very different way, but, and this isn't my forte, obviously, although they go hand in hand and we're required to understand these things.
Yes.
I'm not an attorney, and I guess the thing is, just to expand a little bit on the customer, and I'm sorry, not the customer, the realtor. Sometimes the realtors, they'll say they don't want to listen sometimes. They don't even want to listen when we're like, listen, we understand you have another relationship in there, but please understand that you may be costing the borrower a lot of money if you're not giving them other options, because we compare ourselves. I know who your lender is, and this is their rates and price today. Look online, here it is. And here's what I can do in the same deal, and I'll get a loan commitment in 24 hours. Like, wouldn't you want the customer to know that? Like, and a lot of them just don't. A lot of them really just don't care, or they just will think in their head, oh, I feel like a lot of it is they don't want to believe it, so they just kind of like turn to it, because it's like, okay, so if you're correct and you're going to save them thousands of dollars, how many hundreds of thousands of dollars have I cost other borrowers by not referring them to you too? And they just don't want to accept that, so it's frustrating. How do we educate more consumers? I mean, because it's clear that, listen, I'm not saying all realtors. There's so many realtors that work for these companies that have these affiliated relationships that will only refer deals to others because they know that their in-house is not going to give the borrower the best deal. And there's a lot of realtors that do that, but there's a lot that don't. And I want the consumer to know, hey, just because your realtor referred you to the in-house mortgage person, go get another estimate from somebody else. Like what we'll do, and I try to make it easy for people too. Let's say they've gone through the process. I'll say, just send me an email with, if you have a loan estimate, great, send it to me. If you don't, just email me what you're being told and offered, and I'll give you kind of a, hey, with the assumptions of A, B, and C, credit score, loans to value, debt ratio, a couple of assumptions. I'll make clear what those are. Here's an idea of what this would look like today for you based on, what kind of lock, and give them an idea without having to go through the whole process. And, and then if they like it, then they can go through an application to actually confirm that. But that's what we'll try to do, that as hey, you don't have to go all the way in the water. You can put your foot in and see if you like it, But I just wish there was more education out there. So the borrowers will say, oh, thanks for your referral, and we're also going to get a second from, this company over here. And I'm hopeful that with this podcast that some consumers will be able to see this and make, oh, wow, okay, well, I learned something new today.
Yeah, interestingly, that's exactly what I was thinking. As you were saying, you hope there's more education. I think you're doing that. So you really are an ambassador for not just compliance, but for consumer protection, which is huge. And fun fact, that is the number one job of all the banking departments. And I'll just throw back to something you said earlier, which was, why companies do this. And, I've talked to business owners who tell me that it's a risk they are willing to take. It's a cost of doing business. And, they have the position that they'll take the chances and they may or may not get caught. It's just not a way, I think, that is worth doing. In the Bernard Law Group, we like to say compliance so you can originate it by day and sleep at night. So, I don't think it's a good strategy to sort of do whatever and hope you never get caught, right? It's just playing the odds doesn't seem to make sense. And again, consumer protection, right? If you are in the business of serving consumers, why wouldn't you want to give them what is in their best interest? And as you said, if you're aware that this program or this company that you're referring your clients to really does not have the best loan terms available for the consumers you're serving, again, why? I mean, it just seems so logical to me what you're saying. I can't really understand why else. But the why else, James, tends to be the incentives that people get, which are not legal. And interestingly, when RESPA became a law, it was enacted in the 1970s, 1974, I believe, it was to combat this exact thing that we're still talking about in 2024, right?
Yeah.
Because, for example, what would happen is someone would go to a, let's say, for argument's sake, a title company, and they would, and the cost was $1,000, and I'm making this up, and they would go to the mortgage company and they would say, well, it's, for the kind of mortgage you're getting, it's $4,000, and in fact, the $3,000 extra was the kickback that was going under the table to whomever was referring the deal to them, right? And you had to use this person and you had to use this company and so forth. That's exactly what Congress was thinking about in the 70s when RESPA was created.
Yeah.
Literally the same thing we're talking about right now. Not to increase the cost to consumers because of referrals and kickbacks, and to ensure, especially with the enactment of the SAFE Act, for licenses, the Secure and Fair Enforcement for Mortgage Licensing Act, which was enacted in 2008, which required loan officers to become licensed, right? Increase the level of required professionalism. And it also created a fiduciary responsibility for loan officers to look out for the consumers. Before that, it was, basically you price a loan based on what you were going to make. And it was changed dramatically to ensure that the focus is on the consumer. So to your point, James, it is, again, mind-boggling. Why would an agent who presumably, or anyone in the industry, presumably not care about the outcome for the consumer? It's a long game. You're in this business for a while, right? And, referrals are a huge source. And if you do something amazing for a client, they're going to tell their friends and family about you, right?
Yeah. I know a lot. One thing that I know is some of it is, so a realtor may have a relationship that they've built with a loan officer who might be great, excellent skills, gets back, calls them at 10 o'clock at night on the weekend, will talk to the customer anytime, knows what they're doing, so they just refer everyone because that loan officer is doing a great job. Well, the point is, though, if that loan officer's rate is going to be, let's say, a 0.5% higher than, someone else like us as a wholesale broker, and the service we're going to be able to do, at least as good, how is that doing them the best service just because you know that loan officer is good? Because the point is, a lot of non-bank lenders, their pricing has gone exponentially worse, progressively worse. And I mean, why do you think last year the wholesale channel grew to 24% of total market share? There's a reason for that because the non-bank lenders' pricing is getting worse and worse and worse. So the spread, and I talked to a lot of loan officers last week specifically, and when we compare pricing to, they're just like blown away. They're like, what?
Yeah.
Like, you mean you'll pay me more per deal and I can give the customer a much better deal? I'm like, yeah, this is it. This is what our pricing looks like. And one of the recent loan officers we brought on, I said, why is everyone else still there? Is it really just that they don't know what you now know? He's like, yeah, that's it, because it's education. That's the point of this podcast. Is the more, and hopefully we get a lot more followers and people learn more. But it's just there's not enough out there. There's just not enough out there. And the problem is things have changed so much. They've changed so much, and people just don't realize it because they're too busy and they don't realize it. So we have to educate.
And I think the point of habit, as well as you said, and people take the time to really understand their responsibility to the consumers. And sometimes people aren't even aware of the fines and penalties that have been, issued on companies that have violated these rules. Again, you can go to the CFPB's website and look at their enforcement activity. In 2023, the CFPB fined a real estate agency and a mortgage company a combination of $4.5 million for RESPA violation, for kickbacks, and for this idea of giving them access to certain particular websites internally so that people could have access to consumer information, without the right to have that access, right? And also because if the people in those, MSA relationships did not perform, they got kicked out of it. And it turns out that a whistleblower in one of those kind of relationships, MSA, illegal MSAs, by the way, reported it. And it had gone on for years, by the way, to go back to answer the question about why people do it, right? It had gone on for years. It had not been examined. And when it was, however, they went back to the beginning and looked at every single thing that these people did to get to that point. So these violations do happen, but they don't make the news. You have to be subscribed to the CFPB's enforcement actions to really see and understand that this is happening in real time. Because I think if people really understood that, real estate agencies have gotten fined for violation of RESPA, a lot of times, it doesn't seem like the real estate industry gets fined, but they do, right? And the orders are out there, and for the very same things we're talking about, for illegal kickbacks, for basically creating these arrangements that are so-called marketing arrangements, but really all they are, once the regulators dig beneath the surface, are just kickback arrangements. In the old days, there used to be this thing called the desk rental. I don't know if you've heard about that. That was another way they arranged the kickbacks. But that not to interrupt you, I'm sorry, but that is one of the specific things in the agreement that we reviewed, was that we had an office space time, a dedicated, office in any of the real estate offices we were signing on with. And that was one of the main things you pointed out, what was specifically not compliant about it. Right. And it wasn't compliant because it is illegal to originate loans at a location where you are not licensed. Now, I'm not talking about meeting the client at Starbucks or going to the client's home to fill out an application for their convenience or showing up at the client's workplace to have them sign a document. That is not what I'm talking about. I'm talking about having a dedicated space to originate loans. And any realtor or real estate office that offers a loan officer a dedicated desk for whatever that cost is to originate loans so they can be their in-house person, if that location is not a licensed, authorized, and known by the banking department with a branch manager, right, who is dedicated to that location and authorized to work there, then it is an illegal space. And what you're participating in is an illegal kickback, a violation of RESPA, and a violation of Connecticut banking laws. So it's really critical to understand this. And I still hear people that think, oh, yeah, that's okay. And it's not.
I just found it so shocking that one of the largest real estate companies that exists has these agreements and that they're still doing this. I mean, you're like, you start laughing at me because you're like, you should see the biggest marketing fines are from the largest banks in the world, the millions and millions of dollars. And it's just, so I guess the point there is it doesn't, just because somebody is big, and it doesn't mean they're doing it right.
Doesn't mean they're doing it right. And I mean, we all know there's a big company that just got a multi-billion-dollar fine and decided to drop out of, wholesale. I mean, they had the deep pockets. They could afford to be non-compliant. But eventually there was a number that discouraged them from continuing those unlawful practices. So, I always say to people, because somebody's doing it doesn't mean it's legal. There are people out, people doing illegal things all the time. And so the industry isn't immune from that. Yeah. There are people who are willing, to do things that aren't legal. I mean, a little bit off topic here, but I've in the state of Connecticut, there was a loan officer going around collecting upfront fees in cash for taking an application. I can tell you he no longer has a license, and he was doing it for quite a while until he got caught, right? So, the things I hear in my line of work as a compliance attorney almost on a daily basis continue to shock me, that people still take these risks and they lose their licenses. There are companies in Connecticut that have lost their entire company for having unlicensed loan originators in 2024 or 2023. Well, it happened. But, unlicensed loan originators, we've had the SAFE Act since 2008. And speaking of, marketing and leads, I've recently encountered a loan officer who has a great social media presence and generates a lot of interest from consumers, and have indicated to me that he may or may not be selling leads. So again, it's like, are you kidding me? First of all, to sell leads in any state, you are required a license.
Right.
And if you and speaking of referrals, et cetera, if people are purchasing leads, they have to ensure they're dealing with people who are licensed lead generators. And if you're on social media and people are coming to you and trusting you with their information, you can't disseminate that for a financial gain. So people really have to understand, as loan officers and as realtors, that your number one job when it comes to the consumers that you're serving is to serve them, right? And to serve them compliantly, right? And these illegal arrangements that cost money and typically make the deals worse for the consumer, really need to think about that and work with people who are going to work in the best interest of the consumer.
Like, I wouldn't have as much of a problem with it if the companies that these bigger, larger real estate firms have affiliate relationships with were actually giving deals similar to like what we could do. And it's like, okay, fine. You know what? The consumer got a great deal. There's really no harm to them. Right. But that's like 99% of the time is not the case. Right. So I guess my message, realtors, if you have an in-house mortgage person, of course you can refer them. We're not saying don't, but also refer another type of lender, like a wholesale broker, like us, not just your in-house person. Give them a different type of lender, because, they'll thank you for it later. And just do some comparisons. If you're not sure and you've just been referring to your in-house because you just assumed that everyone's rates are the same or they're doing a great job, just refer out to somebody else like a wholesale broker. Refer out a couple. Tell the customer to get a comparison from both. You'll probably be shocked at what you get back. Do you have any other comments?
No, I agree.
On that point?
Yeah, I agree. And again, I can't say consumer protection enough. Literally, that is the number one focus of regulators, right? And everything that a mortgage company does is viewed in the light of whether those activities protect the consumer, right? And so I share your passion in ensuring that as a mortgage professional, you're looking out for the best interests of the consumer. I don't think you're saying, and I just want to make that clear, I don't hear you saying or think you're saying, only send your deals to Forte Financial. No. I really hear you saying get educated, and I endorse that 100%. See where you're getting what is in your best interest, right? I think I might have said that phrase 10 times already today.
No, but it's funny. I actually want people to go talk to somebody else. I'm like, good. You did talk to the bank or this person or that person. So now you can see how much better, because I love it. They're like, James, you're like significantly lower than the other three people we talked to. And I'm excited about that because now I'm like, now you're getting the best deal. Not just because someone referred you to me, but because you actually have shopped. And just, listen, a lot of consumers shop, especially as rates have gone up. But there's not enough of it because there's too much, and you also get a lot. This is off topic also, but a lot of people. And this has nothing to do with realtors or real estate companies, but this is for the consumer. Their family, their mom, their dad. Oh well, talk to this one at our bank because maybe a long time ago that was the best solution. It's probably not anymore. Like, don't just because it's your parents who, of course, want what's best for you. I'm sure.
Yeah.
They don't know what we know. They don't. Sorry,
Right,
they just don't.
right.
So just get that second opinion. That's all. I'm just trying to educate buyers and existing homeowners.
Right.
When they're looking for refinances too.
Yeah. I think it's a real value that you're providing because having these conversations will help people expand their knowledge of what entails the entire or the entire scope of getting a mortgage, right?
Yeah.
And in terms of referrals, of course, referrals are great because someone referring someone to you is endorsing your professionalism, right? They're endorsing the fact that you're competent, that you have worked in the best interest of the consumer. So that's great. But as you said, that should not be a referral that is really just simply steering to what I've always done all the time without any notion of what is in the best interest of the consumer. Because if you're in the industry and you're not expanding your own knowledge, how can you truthfully help the people that you serve? And, sometimes we think because we do this every day that it's common knowledge, but it really isn't. And that's why I think what you're doing is so terrific, helping people to understand all the nuances, when they're getting a mortgage, what they should think about when somebody refers them. Wait a minute, have I checked to see whether this is the best thing out there for my circumstances, for my situation, right? And understanding that sometimes, especially if someone tells you you can't see a house unless you've had a pre-approval from this particular lender or broker, you should know right away that is illegal. No one should tell you that in order for you to see a home, you must be pre-approved from this specific person. And I've seen it too where people say, the builder or in new constructions and so forth. Again, there is nothing wrong with affiliated businesses. Affiliated business can occur under RESPA. They can promote each other under RESPA. They must disclose. But what they cannot do and can never do legally is to tell the consumer that they must use their in-house person or to steer them only to that person because this is the only option for them to see the property or to, get whatever access to any of their listings. It just is not true. And I hear it all the time. I also hear, which frustrates me because, as you know, I'm a veteran, that, people will that realtors have told the consumer that, no, you can't see the house if you have an FHA mortgage or if you have a VA mortgage. I find that so intolerable, right? Because, again, steering consumers, especially if you're a professional taking someone to see a home, it's not in the best interest of, for example, a veteran borrower to steer them away from a particular loan because the homeowner is confused about the VA loan program or any other loan program for that matter. And the realtor is acting illegally. And I say that not in black and white. I say it just plain language spoken as is illegal. There's no gray.
You strike a chord very recently, and this has happened forever since I've been doing mortgages. But FHA loans right now, anytime we give a pre-approval letter and there's an FHA loan, everyone we've gotten a kickback that said, can they qualify for conventional instead? And every time it's the same conversation. It's like, you're going to get a worse deal to the customer. If you want a conventional loan, yeah, we can get you a conventional loan. As you know, we've gone over what the difference is, but you're going to get a worse deal. And it's really frustrating that sellers are obviously being coached by their agent are assuming that it's a bad loan or there's going to be a problem with the appraisal. There was a lot more things way back when on FHA loans, which I think a lot of older realtors have been around for a while, probably think and assume that it's still the same way or aren't really sure. I mean, there's very few differences on an appraisal now for an FHA or conventional. And, you know, it's just sad. It's just sad to push. I mean, then again, we're in a crazy market where people are putting offers over asking and not getting their offers accepted. So, you know, it's the sellers can do it a little more indirectly, even though they're really targeting not wanting those kind of loans.
However they do it, it's illegal.
Yeah.
And HUD, you know, fun fact, people should know that HUD prosecutes not only homeowners that are selling their homes who violate the Equal Housing Opportunity Act, Equal Credit Opportunity Act, by telling people they can't get FHA or VA loans, but they should also know that the realtors are committing an illegal act. So yeah, I understand the market and the fact that there are people making crazy deals, you know, offers over asking, waiving inspections. I've heard all the madness, right? But the bottom line I'd like to convey is to steer a consumer away from a loan they qualify for just because you as the agent or the realtor, the agent or the homeowner thinks that this is going to be problematic when you haven't educated yourself on exactly what you've just said, that there really isn't much in terms of underwriting guidelines in FHA and conventional loans today that is going to make it so disparate that it's a dangerous thing to do, right, as a professional. Mm-hmm. And, you know, your concern has been about steering, and this is one of the ways people steer people unlawfully as well.
Yeah, we have a deal right now I'm working on that, you know, the credit score isn't great and they're putting minimal down. So, he asked for conventional, and I'm like, okay, here's your pre-approval letter. You're approved, but just understand FHA is definitely going to be a better deal for you. So fast forward, his offer is accepted, right? Comes in, and I'm like, all right, well, let's get your paperwork so we can really put the details together. I'm like, listen, this is what it looks like for your conventional loan, but this is what FHA looks like. It's a much better deal for you for, you know, A, B, and C. How, you know, your pre-approval is for conventional. I said, I already know you probably will get pushback, and you shouldn't, but you probably will. So I want you to be aware of what's available and that this is definitely a better deal. So, you know, and he said to me, he goes, well, I'll tell you right now, I think it's going to be a problem because the seller accepted our offer because our loan had slightly more down with conventional versus the other offer was actually a higher price, was an FHA loan. Mm-hmm. And it's just, I'm like, wow.
Yeah. And that's a complete lack of education.
It is.
And a lack of understanding that activity is illegal. I do understand the pressures on the real estate agents and the sellers. I get it. But that doesn't mean it's legal. That doesn't mean it should be done. And that doesn't mean that it is not a violation of the consumer's rights, because, you know, any loan officer out there knows that under TRID you have an anti-steering disclosure. And you have in that disclosure a comparison table, right? And in that comparison table, it tells you the pricing of the loans that are available to you, whether conventional or FHA. Sometimes FHA is more expensive, sometimes it's not, right? And the fact that a loan is maybe more expensive isn't always the determining factor. There could be other issues that cause, you know, the expense on a transaction, but is the best loan for the consumer in that fact pattern, very fact specific.
Yeah.
So, but to tell a consumer who is qualified and would do better that they can't see the house or they can't, or you won't accept their offer because their FHA is downright illegal. Yeah, downright illegal.
Well, this has been very enlightening, honestly. I hope some of you consumers who are maybe out in the field facing the battle right now are listening to this, so you can from the law right here. Like I said, we try to protect people, so this has been great. I mean, I do you have any other final thoughts that you want to share with consumers or realtors? Because this one is targeted at both, I would say, realtors and consumers.
Yeah. For the realtors, I would say, really as James has been pointing out, get educated, right? Understand the business you're in. If you've been in the business for a long time, there's a tendency to just go with what you've known in the past. Understand that laws constantly change, that there are enhancements to programs. There are a lot of opportunities that are out there that are beyond what you may be aware of. Seek out the loan officers and companies that are searching and always looking for the best interest of the consumer, like Forte Financial. And just understand that by doing your due diligence, by learning more, you really are setting up a consumer for great success. And the better they do, obviously, is the better they will feel about the experience, and more referrals tend to come from that. For the consumer, again, there's a tendency to just sort of take what the last person told you. Understand that there are resources like this podcast and some of the resources we mentioned here as well. Get educated. Ask for other options. Ask for comparisons, and really ensure that the person you're working with is working in your best interest as well.
Well, thank you, Wendy. Thank you so much. This has been awesome. I really appreciate you taking the time to come on here and help us educate, because there's not enough of it, and this is my passion. And you asked me originally, oh, you're doing a podcast. I didn't want to do a podcast because I didn't know what. I'm like, I don't want to do a podcast just because everyone else is starting to do these, and video is now the way to go, because that's not me. I'm not going to just do what other people are doing. But when it finally hit me, like, the whole reason I opened the company, like when I was a non-bank lender for a while, it would frustrate me that, like, I knew that a customer could go to a bank or a wholesale lender and get a significantly better deal than I could give them, and I didn't sleep at night. And when I started to do the research and found this model and what I could do, I was just like, what am I still doing here? So we did that. And to be able to do what's best for the customers. And I've been so passionate about that I'm like, all right, it's a perfect podcast. Is education, sharing this information, because people don't really know, because they're getting bad advice, unfortunately. Right. And not necessarily bad advice maliciously, that just because of the lack of education or things that have changed that the people giving them advice don't know. So, that's our job.
Well, I'm really glad you did this, and thank you for having me. And I really hope it added some value, and that people see your passion and really take your advice about getting the information they need to help them to really make better decisions.
Thank you, Wendy. All right, well, this has been a great day. Thank you so much.
Thank you.
All right.